Here is all what you need to know before going into trade for 11 September 2020. In the international market, as expected, the European Central Bank kept its key interest rates unchanged and the size of its monthly net asset purchases at 20 billion euros. The meeting did not offer much detail on the central bank's outlook around the Eurozone recovery. In the US equity market, Nasdaq was in pressure once again, falling by 2 percentage points. On the back of safety buying from Nasdaq fall and the end of heavy borrowing week, the US 10-year benchmark ended 3 basis points down at 0.68 percentage points. Ahead of November 3 US president election, the volatility in the stock markets will increase and that will lead to flows in the US treasuries for now. In the crude oil market, crude trading stable at $39.40 per barrel. We still maintain our short call given at $44 per barrel. In the currency market, one interesting fact about euro is the euro has risen 10% against the dollar since March, a vote of confidence by investors, but that also creates big problems for European exporters. Their products automatically become more expensive for customers who pay in other currencies, putting them at a disadvantage against the foreign rivals when the sales are already depressed and the competition is intense. Germany, whose economy powers Europe, suffered a 12.5% plunge in exports outside the European Union in July compared with a year earlier. But still, ECB in their meeting yesterday decided not to touch the stronger euro issue at this point, which led the euro higher and is now trading at 1.19. Dollar index trading strong at 93.27 and is forming a strong base, and if Friday's inflation data supports, dollar can march ahead as well. On the USD INR front, the rupee's strong support at 73.70 acts as a hurdle and has not been breached since yesterday as well. If 73.45 is breached and stays, then 73.05 is on the cards. But one needs to be watchful for India-China border escalation in the short term. In the domestic market, in yesterday's OMOs, government accepted entire 10,000 crore offers and 579 cutoff yield was at 590, whereas the 579 GS 2030 closed the day at 596. RBI is trying hard to bring the yields back to 590 levels, but not enough, and market is sending RBI a clear signal that the market cannot absorb any high borrowings. Indian CPI numbers are due on Monday. The median economist expectation is 6.90 and above. We at Knight Research believe the inflation to stay above 7%. Scenario analysis for inflation is, if inflation stays within the 670 to 720 range, bond markets will certainly not like the situation and the fear of rate hike still remains. If the inflation falls below 6%, which is an unlikely event, then the bond prices will see a sharp rally on the hope of early rate cuts. In short, given the current inflation dynamics, we do not see inflation going below 6.7% at all, and there is a high chance of increase in bond yields. Hence, the prudent strategy would be to stay out and wait for the inflation data to make any decisions for your AFS HFT trading portfolios. Even after yesterday's OMO, GSEC yields continue to inch up, and this trend will be visible in today's GSEC auctions as well. Market will demand higher yields for today's GSEC auctions. Night statistical cutoff ranges will be available at your service by 10:30 a.m. today. If you haven't subscribed to our cutoff ranges, then you can reach out to us on 9930307466 or research@knightfintech.com.